Hello, my name is Corey Pritchard, and I'm recording this from my home in Dayton, Ohio, and just wanted to take a moment to talk about life. My name again is Corey Pritchard, and I'm the head financial engineer here with True Financial Engineering, and my specialty is designing storehouses of wealth. For many people, they have no idea what a storehouse is, or when I say a true financial storehouse, then what that means. Immediately when I start to talk about the word life insurance, then they start to get real weird and believe that they know everything about the conversation I'm talking about, or believe that it's irrelevant. So I wanted to make sure I could take a moment to just have a conversation again about life. So when we're dealing with something called life insurance, and the reality is that most of us have been sold life insurance, have been marketed life insurance based on the death benefit. So when a life insurance agent or a company, comes to you and they advertise something about life insurance, then really, to be honest with you, they are telling you very little about the components of the life insurance as far as what that really means for you and how it benefits you. Is it a reality that there is a partnership between life insurance companies and policyholders that when they agree to pay a certain amount of money for a specific amount of time, that when their heart stops beating and their life leaves their body, is that they're willing to pay a set tax-free amount to the person's loved ones? And the reality is yes. So that is a benefit to having life insurance. And for some people, they sell that based on the hospital bills or the funeral expenses that are left behind. So it sets the mindset for a person to try to get the least amount of life insurance that's needed. So they say maybe I can get buried or cremated for $10,000. So what they set on is just paying $10,000 for life insurance. So the family is left with a fixed amount of $10,000 after the person is gone. But the reality is some life insurance agents, come up with a concept where they say those premiums are too low and we want to get some more premiums. So this is a reality. It works out for the life insurance agent, but it's a reality for the policyholder also. Is that for people that have a higher income? I mean, to be honest with you, I have children. I have three children right now. The youngest is 8 months old. The oldest is 8 years old. So something happened to me or my wife right now, then that's the most vulnerable time in their life. I mean, everything changes. Someone's going to have to take care of those children. There's expenses that will be needed. And to be honest, the life that I would have set for them, desire in my heart, I wouldn't be around, and my wife wouldn't be around to make sure those things are in place. So what a life insurance policy can do, based on the way again that they market or sell this, they take your income, say your income is $50,000 a year. They multiply that out by, whatever the number is, say 10 or 15 or whatever it is, and they justify you taking a life insurance policy for that amount, because what it'll do is it'll guarantee that your family could make it past that initial hit, right? It takes the initial hit from the family to kind of offer a buffer until they can get back on their feet. If you have a mortgage, it can pay off the mortgage, pay the car payments off. There's other financial obligations that are needed. Then a policy could take care of that. Maybe $1 million policy or a multi-million-dollar policy could take care of that. Most of those policies, when we're looking at two scenarios, the first one was thinking about like a final expense program or life insurance policy. That's considered to be a final expense, which is a whole life insurance policy. The other one, in the second scenario, usually a person is purchasing a multi-million dollar or $1 million policy. Usually they're going to purchase a term life insurance policy. And term life is a wonderful, powerful tool that allows you to buy more life insurance for a lower amount of money. But the challenge is, to be honest with you, most of those policies are going to be a 10, 20, or 30-year term policy, which means that they will probably expire before you're age 65. And in reality, it's just dealing with numbers. The fact is, it's a reality. There's no way you can get around that you're going to die, okay, unless Jesus comes first, right? So if you're going to die, then the fact is, what I want to cover is I want to cover the time that I'm most likely to die. So the reality is I'm most likely to die when? Is it before I'm age 65, okay, while I'm still working, or am I more likely to die after the age of 65 when I'm done working. And the reality is, it's a high percentage of people that are actually going to die after the age of 65. So when should you make sure that you have life insurance coverage in place? And that's what you have to decide for yourself. And the answer to that question obviously is yes, you should have life insurance, throughout your time when you're working to make sure that you're taking care of those things and making sure you have as much money available as possible if something does happen. Again, to help your family out and to also make sure some of the desires that you want for your family, they actually continue on in your absence. But it doesn't make sense to have a policy that's going to expire before you retire. It doesn't make any sense. Why? Because you're most likely to die after you retire. It doesn't make sense to have that policy be paid into year after year after year, and you don't have any benefit from it. Okay. And again, with term policies, it's not a big problem, but the challenge is that it's like renting, a house or an apartment for 20 or 30 years. You don't have anything to show for it. And when you maybe in a house or an apartment scenario, you could actually live that place and live there your entire life. But with a life insurance policy, a term life insurance policy, it's very unlikely that a person would keep a term life insurance policy for their entire life. Why? Because at some point, those premiums are going to increase, and they're designed to increase in such a way that at some point you won't be able to afford it. Okay. And even if you could afford it, it wouldn't make a business sense in order for you to keep that policy. So you would term it out, right? You would terminate it. So that means that every single dollar, every single cent that you paid into that policy for the life of the policy would actually be forfeited. You forfeit that to the life insurance company. So for the time that you've actually had the policy, they used your money to make money. Okay, didn't give you any return on the money that they actually made out of your money. And then when the life insurance policy is done, they keep the entire amount of the premium, and you don't get anything out of it. Okay, and I don't think that's a good partnership. So when I started in the life insurance business, a number of years ago, I was always looking for a equal partnership. Of course, I haven't found an equal partnership, but I at least wanted to make sure that everyone involved had an equal stake. At least that we're going to benefit at least some. It doesn't make sense for one party to benefit a lot more than the other. And I understand you can't have skills that are completely equal, but I was looking for that type of relationship. And I didn't think that it was fair that a person could pay into a life insurance policy knowing that the life insurance company, like gambling, I mean, to be honest with you, is that way with the term life policy, is they are very likely to have to pay out that death benefit. And on the times that they actually do have to pay out a death benefit, they've taken in so much premium from the multiple policyholders that it's going to more than cover that. So they're always going to make a profit. It's like going into a gambling boat or a casino and thinking you're going to beat the house. Okay, they're never going to lose. Statistically, they're already designed to win. So they're going to win no matter what they pay out for that day or that year. And the life insurance policy is the same way. Okay, so when I'm looking at that, then I say, man, shouldn't the policyholder have some sort of benefit from the money that they're paying in to the policy outside of the death benefit? And I believe they should. Okay, so in whole life insurance policies, there is a potential to be able to have some of the money that's paid into the policy that actually can earn an interest. Some of those actually pay dividends. If you haven't heard about dividends before, then if it's a stock company, then all it is a case where if it's a stock company, then any profits that are paid out, they're paid to the actual stockholders. Okay, so if there's a profit, then those are paid out to the stockholders. The difference is they have mutual companies. Okay, they're it's not stock companies, but they're mutual companies. So these companies are not owned by the stockholders. They're actually owned by the policy holders. Okay, when we're talking about insurance. So what they do is when they make a profit, then they actually pay back a portion of those profits as dividends back to the policyholders. So in those cases, you can have a life insurance policy that pays you back dividends, okay, if there's a profit. And one of the major companies, they were number one for a number of time, not going to mention their name, but they actually went back since I can't remember the year, but it was at least 30 years. Every year for the last over 30 years, they actually paid out dividends to life insurance policyholders. Like clockwork. They say it's not guaranteed, which is not, but it's a case where it's chances are that those policyholders are going to get a dividend. In the case with those types of policies with these mutual companies, then those dividends can actually earn interest, okay? Or they can buy additional life insurance. Again, it's still a case where you're paying into a life insurance policy that you yourself, as a policy owner, will not get the benefit from the death benefit. But it doesn't mean that you shouldn't have living benefits. Again, we're talking about life. So inside the policy, if you needed to actually access that money, you could access it by either what's called a partial surrender or withdrawal, taking some of that cash value, okay, and surrendering some of the death benefit for the policy, or you could take a loan, okay? And that loan, okay, you could take out for any reason, pay it back anytime you want to. Now, here's the challenge I ran into with that. Again, I'm always looking for these, partnerships. Is that I didn't like that the interest rates were as high as they were. So even in these mutual companies that offer these policies that where you could earn an interest rate, it could be 3, 4, 5, 6%, depending on what the going interest rate is. They guarantee a minimum, usually between 2 and 3% interest. But the challenge I dealt with is when the policy owner actually wanted to access the money, then they would charge them anywhere between 6 to 8% interest. And I said, man, that's pretty hard. And not only is the interest rate charged at about 6 to 8% interest, then it's a case where they actually calculate the interest on the daily rate, okay, just like a credit card, okay? So as long as the loan is outstanding, then this interest is continuing to accumulate to the point where if they don't pay it off, okay, when the death benefit is paid out to the family, then they're going to take that minus, the money that was loaned out, plus the interest rate on top of that, and they're going to take that minus and take it and minus it from the death benefit. I said, man, that's a okay. If you're dealing with people who take loans in the world, it's not unheard of that banks or different places can offer a loan at 20 percent or higher interest rate. I think it's just outrageous to think about, but that's possible. So in comparison to a 20% interest rate, maybe 6 or 8% is not so bad. But I said that's not good enough. So what I sought out was a program, again, policies that would allow my policy owners to be able to have access to their money for life. Okay, so as they're storing money up inside the policy, again, it's a life insurance policy, so it has a death benefit. So the death benefit is there. So Lord forbid, when something happens to them, then the money will pass on to their loved ones tax free. Okay, so that's always there because it's a life insurance policy. But they are able to actually overfund. Okay, so not just pay the minimum amount that they can pay into the life insurance policy, but instead of getting 0.5% or 2% or whatever it is in a bank account, a conservative bank account or a CD, then how about being able to get 6, 8, 10, 11, 12, what if their policy could, possibly get 30 or 40% interest if the S&P 500, which is based on actually, if it returns that amount, then how about being able to get something like that? How would that sound? Okay, so for me, I found exactly what I was looking for. So I found, exactly what I was looking for. Why? Because I'm able to actually work for my policy owners, okay, to give them what I believe is a really good program that allows them to be able to get a really strong interest rate on the money that's actually inside the policy. If they need to take it, instead of paying that 6 or 8% for the first 10 years, then they only pay 0.5%. This is a 0.5% interest, which is unheard of for the first 10 years. And then from year 11 going forward for the life of the policy, they don't have to pay any interest on any loans that they actually take. So they actually can have access to their money tax-free. Again, you don't pay any loans, but you don't pay any taxes on loans. So when you take the money out, you can take it, buy a piece of property, a piece of land, something like that, or business, and then put the money back, pay yourself back without having to pay any interest. You literally are becoming your own bank. So just a powerful thing to understand that, and all of that with no risk. Okay, so I like the fact that all my policy owners are able to invest in something like that with no risk at all. So you say it's too good to be true. To be honest with you, it's not. The only thing is you have to be healthy enough to be able to actually apply for and to be able to have a life insurance policy. So the storehouse is a wonderful, wonderful place to put your money. It's a secure place to make sure that it grows at a strong interest rate. any interest rate that's above 7%, then it will double every 7 years. If you get 10%, it's going to double every 7 years. It's just a wonderful, wonderful place. So if that's something you'd be interested in hearing more information about, I encourage you, partner with me, have a conversation. Visit our website at www.truefinancialengineering.com. Again, my name is Corey Pritchard. I look forward to having more conversations about life. Have a great day.